Welcome to Property Showcase, the podcast that brings you closer to the service providers that can inform your decisions about how you buy, manage and research top investment opportunities. Be informed and become a better investor with Property Showcase.
G'day everyone and welcome back to the first episode of the year 2021 of the Property Showcase. I am your host, media and marketing strategist here at Smart Property Investment, Tom Gilmore. Guys, today the topic I want to dive into is investor struggles. Right now, we're all being told to buy, and it certainly is a good time to buy. We're being incentivized to, whether you're a first-time buyer or perhaps a little bit more of an experienced, savvy investor. And I would agree, it is a very, very good time to buy. But there's a lot of struggles that we're facing at the moment, whether it is you're getting priced out of your market in the particular region that you're investing in, you're not really sure which way to go. And I'd like to center this podcast segment around investor struggles and what we can do to overcome them. So joining me today, I have an absolute fan favorite and probably one of the best buyer's agent, if not the best buyer's agent in the country, could be the world. Paul Glossop, Director of Pure Property Investment. Paul, how are you going?
Good, mate. That's quite the introduction. Could be the universe.
Could be the universe.
Milky Way.
Once Elon Musk has figured out how we colonize Mars and so on and so forth.
We'll work our way over there. Yeah, absolutely. We're going to go and harvest meteors and all those types of things. Yeah, it's crazy.
Absolutely. So I thought we're talking a little bit off air, Paul, about this, how I'm actually trying to buy a property in Newcastle at the moment. Mm-hmm. Without getting into the nuts and bolts of it, this property does have a purpose and I am trying to buy this outright. However, I'm facing the problem that I think a lot of investors across the nation are struggling with, and that is getting priced out of the market. I'd love to sort of hear your insights and your tips about what we can do in this time. I'd like to hear, your knowledge on, is this a good time to buy? Even if you are getting priced out of the market, when is the best time to leave the area and perhaps even change regions? What do we do? So that's a good way to start. When should you consider, if you are getting outpriced, when should be the right time to sort of be like, okay, now let's think of a different region to look into?
Yeah, look, it's a really valid point right now and very current. And the reality is that it's not necessarily a specific suburb or a city or even a state at the moment. It is nationally, and as we record this, what is this, on the 25th of February? It's essentially, we go back last weekend, auction clearance rates, and I actually put a post out on Pure Property Investment on our socials, just with a screenshot of the total national clearance rates from a state-by-state approach. And it's the first time in my existence looking at property data, and I look at property data literally multiple times every single day and have done so for years and years and years and so many different data sets, is it's the first weekend of clearance rates above 80% in every single major market on the same weekend that I've ever seen. Now, that's all good and well. It's a snapshot of properties because obviously most properties don't sell at auction. About 80% of properties sell under private treaty. But the reality is that what you're facing is your struggles. There is pretty much every single person across any major market across Australia right now, whether they're buying an investment, whether they're buying their home, whether they're buying their 20th property, looking at the same things, and they're considering the same things, saying that property's not worth that. And that's literally when it sells and goes under the hammer, saying, well, they've paid way overs. But the reality is that you've rewind a month prior and people are saying the same thing now. And I dare say that within the next 2 to 3 months, once we see official data come out about growth in a lot of areas, and I'm talking a lot, pretty much all your major, probably 20 to 30 capital cities across Australia, regional and major metro markets as well, is that we're probably going to see on paper the fastest period of capital growth potentially that we've ever seen since records have begun, which is a wild statement to put out there, but that is the reality. So the reason why I really highlight that is that if you're facing an auction, or if you're looking at a property today, or if you looked at one last week and you become really disheartened to say, the guide was this, let's say the guide was 1 mil, it sold for 1.4, how the heck is that even possible? Either A, are they bait advertising, are they underquoting, or B, has this person just paid complete and utter overs? Is that it is a mechanism of where we're at. We've got ridiculously cheap money. We've got confidence in where money's going to be for the next 2 or 3 years from RBA minutes, from the Fed just coming out literally last night saying that they're looking at extended interest rates periods being on the hold as where they are. We've got billions and billions and billions of dollars liquid in the market, which we've never seen. We've got quantitative easing happening as we speak for round 2. There'll be a round 3, I expect, probably by the end of this year. record low supply levels, record low approvals for new properties. And we've actually got more people in Australia now than we've ever had, as much as people think that you shut off overseas migration and then all of a sudden we don't have this demand. Well, the reality is we run on a net deficit of people leaving. So the fact that the borders are closed means that we've actually got more people in Australia than we've ever had, more demand on property, et cetera, et cetera. So in short, there's two things I would always suggest people do right now is don't be too disheartened and don't look at what property sold for 3 months ago or 6 months ago to get a barometer as to what a property's worth. Because unfortunately, in these types of growth cycles, you throw that out. That rule book doesn't exist for this period of time. And if you look back around 2015, 16, 17, predominantly in Sydney and in Melbourne at that time when they were going through the same type of hysteria for certain periods of time, is that you must consider where the market's about to go. And you also must know what you can afford, not necessarily what you're comfortable paying, but what you can afford. Because to be fair, if you are able to go a bit higher, be prepared to go a bit higher. But also, if you're investing, be prepared to say, well, if it's not that property or if it's not this market, which one is it? And find a market that might be slightly that next tick below to give you the ability to go a bit higher. Because the things that happen in these types of markets, which a lot of people don't consider, is that rental growth doesn't happen anywhere near the same time or the same pace as obviously capital growth when you're seeing rapidly growing markets. Now, if it's owner-occupied, different story. But if it's an investment, make sure you're aware that if you're paying an extra 100 grand or even an extra 5% more than whatever you're paying, that rental growth is not going to keep up. So as and when interest rates do increase, ensure that you're aware that you've got this bracket creep that happens. So there's a few things that I've outlined there, but for me, it always comes back down to be prepared to what your objectives are. If owner-occupier and you want to be in that school catchment or within that walking distance of that certain train station, whatever it is, I get it. Be prepared to pay more than what you think you're comfortable with. Get someone on your team who's sensible enough to know when it's time to walk away. But also off-market is, again, something that I would always stress in these situations. And people listening are probably saying, yeah, great, it's all good and well to say, Paul, but off-market properties don't exist, especially when it's boom times. Well, we've bought 38 properties in the last 25 days, and I can tell you that 30 of them didn't see the light of day. Another 5 of them were pre-market, and 3 of them we bought which were commercial, and they were the only 3 advertised properties that we actually bought. So they do exist. You just need someone on your side who knows how to access them and minimize competition.
Furthermore to that then, just based on, I suppose, somewhat of a prediction, a two-ended question, is the window of opportunity closing for people right now? And how long do you think we're going to be in the phase and the current environment in the market? How long is this going to go for? 18 months, 12 months? How long? What are we facing?
It's the tough one because I actually am already seeing people start to become disheartened saying, I'll just sit back and do nothing. I've actually got an owner-occupier client of mine who sold their house, unfortunately, about 6 months ago, and they're retired. They've got cash. They also want to keep about $500,000 in the bank to have as a buffer into retirement and have money to spend, and they want to downsize. They're in Sydney, and we're trying to buy them a villa to move down into. Now, they had a budget and a property type, which at the time I said, look, it's a tight one, but we've already come and gone from 3 different auctions. They're not prepared to increase their budget. I've suggested to them we need to spend about an extra 150 to 200 to get what they want. They refused to, not to say they refused, but they were wanting to keep a certain buffer, which I understand. But we're at the point now where they're increasing their budget to get a lesser property than what we could have bought them 3 or 4 months ago. So I guess to answer the question as to what we should be doing and what we should be considering sitting back and doing nothing for a period of time, I expect we've probably got at least, from all the major markets, a good 12 months of growth ahead. There'll be certain markets which will grow quicker than others, which they'll actually shoulder off and hit the top of that curve a little bit quicker. But I don't expect us to be in the similar situation where we were in 2017 in Melbourne and Sydney, where we saw a 15-20% retrace straight away, because we're not going to have the same fiscal issues unless APRA and ASIC start to intervene, which they will if they need be, but they're not going to do it in the same way because they know that we're going to try and get back to things like full employment and we need people to spend, and the RBA's got the pressure on to say we need people to spend money, not necessarily conserve money.
True.
So I guess in short, if you're thinking I'll sit back for 3 months, be prepared to say that 3 months could cost you another 5% in growth. And I'm not going to say that it's going to be that much, but it could be more. I've seen instances in the last few weeks alone where I've seen properties sell for 10, 15, in some cases 20% more than what they would have sold for 6 months ago. And I'm not going to say we're going to see another 20% in the next 6 months, but I do expect that we're going to see consistent growth because supply is low, cash is cheap. We've got a few things which might make it more accessible coming up in the next 3 or 6 months as well. So all signs point to consistent growth for the time being.
Absolutely. Look, you're sort of stressing me out a little bit, Paul. I'm not going to lie, because I'm personally invested in this. So look, I believe in sticking to the guns, and I've been working with you and been listening to you now for years. And, I firmly stick to, not paying over what I think the property is worth. But God, you can't be saying that in times like this, because, look, how much am I going to be paying? Because properties are going for, I made a joke about it before, but, going well and truly over 100 grand what the property was listed for.
Yep.
Even the 900K value that went in the Crow's Nest property, that was just ridiculous.
Yep.
At what point do I have to be more aggressive or give in? I'm just trying to think of the investor listening in right now. So, this is where the expertise of you come in, right?
Yeah, yeah, absolutely. And a couple of things that I've also suggested, if people are going to do it themselves and not want to engage a buyer's agent who understands the machinations and the business processes of how to get this outcome the best way possible, is if they're talking about an auction campaign, or if they're talking about a property that's for sale, really try to push towards getting your ducks in a row quickly. So get your building and pests done, get your contracts reviewed, and get everything that you need to know ready to go before you make an offer, and be prepared to be aggressive prior to the masses coming in and putting their extra bids in, and know that if you're prepared to say that's an unconditional offer, and I'm not just suggesting people just put unconditional offers in, but do your building and pests, check your structurals, make sure your finance can be approved, make sure the valuation stacks up, because a lot of people at this point in growth cycles also come unstuck because they pay whatever they want to pay, or whether they think they have to pay for a property, but then all of a sudden a valuation comes in, and all of a sudden that valuation comes in 5, 10, 15% below what they've actually paid for it. And then the bank says, well, that's fine. Our valuation is 950. You paid $1 million. So we'll still give you that 950, but you have to find another 50 grand. You're like, well, hang on, I don't have 50 grand. What do I do in this instance? Well, if you can't find the money, you walk away from the purchase, lose your deposit, and all of a sudden you're poorer than what you were to start with in the first place. So there's another thing there too, that working with a good broker or a brokerage firm who can do your quick desktop valuation to say, hey, yes, with confidence, if you're going to pay that much, the bank will give you that much as well. So they're the other things. There's a few different checks and balances that you really have to consider to be prepared to say, okay, if I pay that much at auction, or if I put this offer in for this amount, yes, I've done my building and pests. Yes, I've checked that the val is stuck up. And yes, I've checked that this is actually still within the level of what I'm prepared to pay from my outgoings, my deposits, etc. And then go and do it. In this market, don't be prepared to nickel and dime, because the next person won't, and you'll lose it, and you'll go back 3 weeks later and think, shit, that was actually a good buy.
Yep, absolutely. Well, you sort of half answered my next question, but I actually want to challenge the audience now for people tuning into this, because I want them to utilize this this coming weekend when they are going to auctions. What's the biggest thing that stands out to you? Whether it be, be super aggressive, or, eye out the people who are currently at an auction, and auctions sometimes have 100 people at them this day and age.
Yeah, absolutely. They're like a mini rock concert at the moment.
So further to that, what is one thing you want investors to try and do this weekend at the auction? And if you see some sort of improvement or anything that helps you along, as to sort of incentivize them to get in touch with you, because I think if they see some form of, oh, that actually really worked, I'd be more employed to obviously employ your services, absolutely, in terms of what you guys do. Yeah, look, I mean, if people are considering whether it's an auction or just a private treaty property, or what they're trying to think the property's worth and what it ends up selling for, is that go in, if you truly are wanting to buy a particular property, whether it's to live in or to invest in, do what I've said, in the sense that make sure your due diligence is done prior to. Get your valuations done, get your building and pests done, get your contract reviewed to make sure everything's kosher as far as where it should be and how it should be. And be prepared to be aggressive in that first offer, because I can guarantee you is that there's two issues with people going in and sort of just waiting for an auction. Is that you go in there thinking, I might get a bargain. Imagine that there's only one other registered bidder and they're just not going to be involved in it. Or alternatively, if it's going for a private treaty sale, I'll just lowball them. To be fair, agents want to get the deal done. They don't care within 1, 2, 3, 4, 5%. And no offense to agents out there, but they're going to get paid regardless at auction. So unless you can give them a home run option prior to going to auction, they're not going to even bother talking to their clients about it. So get your ducks in a row, put an offer in, even just talk to the agent, say, hey, I'm prepared to sign a 6W for New South Wales, or I'm prepared to sign an unconditional offer or unconditional contract from somewhere else because I've already done my reviews. Here's the offer. And be prepared to say, put that offer as a really, really strong position
don't go in lowballing it and thinking, I'm going to go there and I think they'll counter with me, because they've already got 3, 4, 5 other offers that have been tabled and potentially in a similar position. So get yourself in a strong position to go forward. But the biggest advice I could give is get your valuations done. Get either your broker, your bank to do a full high-end desktop. What's the absolute top end that the bank will value this property at? Know that number, because that should give you some confidence that you'll actually get the money for that, and then work backwards from there. Our job ideally is to know what that property's worth at the top end, work backwards from there, and try to shave off as much as we can underneath that surface. But if you're really going to these auctions, and no doubt if you're in Sydney, Melbourne, Brisbane, Perth, Canberra, Adelaide, it doesn't matter right now, you will find that there will be literally 5, 10, possibly 15 plus registered bidders and a crowd of 30 to 100 people. You can't tell me that regardless of what you pay at that auction, that you've got a deal. All you've done is you've been prepared to pay more than someone else has been prepared to pay. Our job is to go into that vendor and have that discussion one-on-one without the audience and without the pressure and without someone else getting emotional and buying the property for more than what we're prepared to pay. And that really comes down to the off-market situation, and think about how much better you can negotiate if no one else is negotiating with you.
Absolutely. I couldn't agree more with that last statement. And it is happening everywhere, this emotional buying and paying well and truly over. But it is the nature of the game that we are living in at the moment. But investors, if you're tuning into this, as I said before, I strongly implore you get in touch with Paul. Give it a go this weekend. I want you to get prepared. And if you like what you're hearing, or even if you disagree with Paul, I want you to get in touch with Paul. Paul, how can people get in touch with you?
We're all over the socials, Pure Property Investments, everywhere that you can ever see. You can register. We punch out a whole bunch of information on how people can be best prepared for these things regularly, just via going to our website and registering for our, typically we push out a fortnightly and a monthly newsletter and a whole bunch of this different information at purepropertyinvestment.com. And if they want to lock in some time with myself, they can go to that same website, purepropertyinvestment.com, literally hit the inquire now button and lock in some time with me directly. I'm happy to give away 15, 20 minutes of my time to have a chat with anyone who's looking to prepare themselves to get either that first investment, 10th investment, or their next home.
Absolutely. And then guys, if that isn't enough for you, you can find Paul smattered right across smartpropertyinvestment.com.au. You can hear him on the Smart Property Investment Show. You can find his ads all the way across smartpropertyinvestment.com.au, articles that we've written with Paul as well. And that dates many, many years ago, all the way right up until a few stories that we've written quite recently as well. But Paul, until next time, thank you for joining us. G'day everyone, and welcome back to the next segment of the Property Showcase. I'm your host, Tom Gilmore, media and marketing strategist here at Smart Property Investment. Over the course of the past few weeks, I have been trying to buy property in Newcastle. I've mentioned this before, and it's coming with its certain challenges, and it started to make me think a little bit about predictions versus actions, and perhaps even change my mentality as to why I should be considering investing in property as a business, or perhaps a business formula. To help me with this topic today, I have a very good friend of mine in the studio, and he's a very good friend of us here at Smart Property Investment. You would have heard him on the Smart Property Investment show before. His name is Sanjeev Sah. He is the director of Investor's Dream. Sanjeev, how are you going?
Thank you, Tom. I'm very good. How are you?
Yeah, very well, mate. Very well. How's things shaping up in the property industry?
No, it's very exciting. As we know, it's pretty hot, and I think a lot of opportunities for people who can see those. Perhaps
even a few missed opportunities, which I think I'm facing at the moment, which we might dive into today.
A lot of missed opportunities.
So, look, this starts us off quite well. So, there's sort of every incentive to buy property right now, both large and small, whatever type of investor, first-time buyer, the experienced investor. It's all there. And across the nation, we're facing no stock across the market. For better or worse, property can't even last half an hour on the market at the moment.
Sure.
But I think you'd be the perfect person to answer some of our questions. Is property predictions perhaps influencing the market for the worse? I know that sounds really strange, because is it influencing it for the better? But is the stuff that's coming out from CoreLogic perhaps further exacerbating things to a point where this is why we're seeing 50 to 60 people at a listing or an auction, and you just think to yourself, oh God, help, and then you're missing out on those missed opportunities? Can you expand upon that a little bit further?
Sure, Tom. Property, the prices and everything, like a couple of things are there, right? One is the market sentiment, which is really positive. Other thing is your like low rate of interest. Money is cheaper than ever, and that's why like stock is low, because even sellers are not seeing the motivation in selling that unless they have to. And you're right, like the stock level is low. Either you're buying a 300K property or a $5 million. It's the same problem across the board. And now the problem arises depending on which side of the fence you're standing. If you are a smart investor or a buyer who understands the market, have done the homework, then you're grabbing those opportunities. But most of the investors or the first home buyers, they are not doing the hard work. They don't understand. They don't have any process we'll talk about. And what is happening, it is costing them a lot of money in terms of like emotionally, they're stressed out and missing all those opportunities, right? You're talking about yourself, right? Yeah. And even they are able to buy it, they're paying overpriced for a wrong product, a wrong stock.
I mean, look, it's a no-brainer. Obviously, your expertise in the property industry as a buyer's agent, I know you have contacts, but it's not necessarily all about contacts. I want to expand upon what you just said before, the process.
Yep.
And the process can start not 3 properties in, not even 2 properties, 100 properties in. This should be starting from the very beginning, right?
True.
Because otherwise, trying to buy the second house, the third house, the whatever house, wherever it is, can become a nightmare. So, what is the process? What do we do?
Yeah. So what I'll do is I'll answer this one in how we like work at Investors Dream for all of our clients, and including what I have done the same process when I was building my portfolio. So it's it is a recipe for success. It's not no-brainer, but there is a work involved. So what we do is like, say you're my client, you come, we put something what you want to buy, especially if we've worked with investors. We say, okay, now you want to buy a property, say worth 500K. Okay, positive cash flow. That's what we specialize in, capital growth, short and long term. We put that. And then first step we do is we go through your goals. Like once you have signed up, we talk about through Zoom's a lot of education session. We start with the goals and we say, exactly tell me what you're looking in next 1 year, 2 year, 5 year time. Because everything is related to the goals. Like you're buying a property, it's not fun. It's not to show off like, oh, I've got 2 properties or 3 properties. It's like it is a real business. And that's the biggest thing. Most of the investors treat as a fun. They're not treating as a business. And the results are like, we are seeing the results, right? What happens with most of the investors. So first thing, goal setting. Now, once your goals are clear, then you see what are the strategy available in the property market. Because depending on goal, like I've got clients who literally want to buy 5 properties in the next 4 years. Of course, with their budget and everything, they have to employ different strategies. At the same time, we have clients who want to buy 2 properties in the next 5 years. So they can go a slow pace, right? And depending on things. So learn about the strategies and now look at your personal circumstance, like what is my budget? What can I do now? Which will help me buy the property, and this property will help me buy the next one. Mm-hmm. So it is a long-term planning, understanding now based on the strategy and your number, current situation, you look for locations.
Yep.
Most of people come to me, even my friends, they say, Sanjeev, what is the best location? It doesn't exist.
Why is that?
Because it's all about, like, say, I'll tell you, like, okay, Gold Coast is the best location in the world, for example. Not in Australia. The property prices or the house price is $1 million. Right now, all we have got is 500K to invest. Yeah. How does it matter if Gold Coast is the best location? As an example, right? So it is, what are we looking? What is required? And now say you have got 4 properties. Again, the same thing. What is my goal for the 5th property? Why I'm buying? What is my strategy? What is my number? Which will help me buy the 5th property? What is required in my current portfolio? It might be you need capital growth, you need cash flow. So strategy and your number will determine based again what is required in your portfolio and goals. And based on that, the location will come. Now say for example, right now all you have is 400K to invest. You look at for 400K, what can I do best, which will help my portfolio grow. And then you look at the locations.
Yep.
So location is literally the third step. But most of the people ask, what is the best location? doesn't matter.
I'd argue that there's even a stage where people can't even differentiate between buying the property that's for cash flow and buying the property that's for capital growth. Some people, not most, sorry.
Yeah.
Some people don't even know that's a thing.
Exactly. That is the process. Now, how to find a location? Again, that's a big chapter in itself, right? It's a big topic. But once you know the location, for example, then you can go through whatever your research process is. Then, like, say you identify a location, then it's like, okay, once you know the location, then the real work start. Is like understanding that what's happening in the location. Say you pick a location, say, for example, I'll take a Bendigo, for example. Bendigo has like, say, 8 or 10 suburbs. Now, what's happening in that market? You literally have to learn that thing. It's not a one day looking at the RP data or anything. All those are required. But understand, talk to the real estate agents, be on the ground, understand the different type of real estate agents, how they operate. Some of the real estate agents might operate as auction only. Mm. It might not suit you, depending on what you're trying to do, right? But there is no shortcut. This is a process. Wherever you go, you have to understand what's happening on the ground, how many stocks are coming, what's selling for, where the opportunity is.
I think this was a really good point, and we might finish on this before we wrap up. But do you think perhaps, let's challenge the people tuning in. Do you think perhaps investors cling to things like core logic data? I mean, we're all reliant on research and data and everything that comes our way, and it is important. But perhaps do you think they cling to it too much that they overlook the fundamentals of property, like you said, working out these points, location, step 3.
Yep.
Then all of a sudden more opportunities open up because it's not about investing in Gold Coast, it's about investing, anywhere really. So what can you challenge people who are tuning into this right now just to change their perception on what they could potentially do this weekend when they're going to listings or auctions or whatever it is that they're looking at? How can they change the way they think?
Yeah, I mean, see, again, I'll follow the same process, like what you're trying to look, write it down, and then look at the location, really go on the ground, not go for first weekend if you're going or second or third weekend, just to learn what's happening, because it takes time, right? What's happening, and then of course those data are required, but it's not just the data, because it's all about working with the real estate agents, asking the right questions. Now, how do you ask right questions? It takes time. It is a skill set. So
I think that's where you come in again, right? You've been building these relationships for such a long time, the real estate agents alone, let alone the other moving parts to the property industry itself, which I can totally see the huge advantage. So if I'm the investor tuning in, how can I get in touch with you?
People can find me literally on Instagram, LinkedIn, Facebook, but they can go to my website, investorsdream.com.au, and they can book a call through one of the pages we have, and they can get in direct contact with me. Yeah,
absolutely. And if that's not enough for all of you tuning in, you can find Sanjeev scattered across smartpropertyinvestment.com.au. I strongly recommend you tune into his latest Smart Property Investment show he did with, of course, host Phil Tarrant. Sanjeev, thank you so much for joining us, mate. It's been an absolute pleasure.
Thanks, Tom.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property, or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.